Welcome back, ladies and gentlemen. Let's talk about Nvidia, Stag, and and why I added these three stocks on yesterday's dip. Nvidia, as you guys well know, AI stock. Everyone's buying the chips from Nvidia. You can't argue with that 20-year history of massive returns. You could have bought way back here on this dip, this financial crash at 17 cents, and look where it went, 125. Obviously, I'm not including all the stock splits, but you get the point. You could have bought the top here at 89 cents and it still ran to 125. So massive, massive returns if you're willing to wait 10, 20 years. Maybe you won't have to wait that long because we are in the infancy stage of AI. We are in the fourth industrial revolution, but we're just getting started. And if you believe that AI, quantum computing, and everything else that is going to come with that, all the new technology that's going to come with that, all those AI chips that are going to be installed in everything. It's going to be everywhere. You're just going to tell your microwave to microwave you something, and it's going to pull out a hand. No, I'm kidding. I'm kidding. That's I don't think that's going to happen. Maybe in the far future we won't be around for those times for the humanoid robots like Tesla is building, supposedly. But the point I'm trying to make is, who's buying all these chips? All these companies are buying chips from who? From Nvidia. So unless you believe technology is just gonna fall off the face of the earth, which it hasn't since its beginnings, and it's only continued to get better and stronger and faster, etc., etc. I believe this is a buy. I bought the dip. I was like, you're gonna give me a dip on this? Thank you. I'm holding for 1,000 plus and the next stock split. So there you go. That is just me. I like the stock, buy Nvidia. Stag and O are dividend stocks. Stag, it recently hit a high of 47 and O hit a high of $80. So it's nice and cheap down here. It's almost half off. Not quite, but almost half off for these stocks. So I was like, you know what? I like monthly dividends. Let's add some more of these. I like these two mainly because A, they're recession proof, crash proof, whatever you want to call it. And I will pull up the information right here. Let's go to Trading View. And we're going to look at the Trading View financials for O real quick. And we're also going to look at the Trading View financials for Stag. And let me just show you the dividend history. This is why I like these two specifically, monthly dividends. But it's taking a while to load. Let's look at those dividends. So they give about 12 cents per share every month, which is not bad. Again, you're trying to accumulate a ton of shares so that eventually you have so many shares of these dividend stocks that you just get an extra $400 in your account just from dividends alone. So you just wake up and you're like, whoa, I got like $400 in dividends. Cool. You can do at that point whatever you want with that. You can reinvest it so that you get more dividends, and then instead of making 400 in dividends, you make 410 and then 420, and it just continues to compound in that sense. So I know I don't really talk about dividends or long-term investments, but I think Stag, if you look at the trading view financials here, same thing with Realty. I think they offer more. Yeah, 26 cents per share in dividends every month as well. So it offers a little more, but the share price is almost double. So it doesn't matter. I just buy a little of both. That's what I've been doing. But again, we look at the statements and remember what I said. What did I say about these stocks being COVID proof? As you can see in 2020, what happened? See, a lot of stocks in 2020, they took a massive dump, especially the retailers, AMC. But what do you see, guys? You see that total revenue? It just keeps going up. It didn't even care about COVID. COVID, what's that? Guess what? We're just going to continue to make lots of money. And then you look at the net income again, positive, and the balance sheet is also incredible. They have way more assets than liabilities, 6.28 compared to 2.84 billion. So, and net debt 2.67 billion. So it's, again, if you're willing to hold a lot, these three stocks that I'm talking about, it's about holding them long term, accumulating them, and you're going to see the massive returns, but it's going to take some time. It's going to take 10, 20 years. This isn't some penny stock. They've been around a long time, and like I know it's weird for me to talk about long term holds, but and dividends of all things, but I've had my eyes on these two, especially O and Stag, and I've been waiting for them to come down. And I'm like, you know what? You're almost 50% off. I'm good. I'm gonna buy some, and I will continue to accumulate if it goes lower. At one point, it dropped as low as $18 for yeah. During the bear market, these two went super cheap. Oh, by the way, Stag here. Oh no, O Realty Income here in 2020, it still continued to grow. It did not care. What COVID? What is that? They didn't care. Net income positive, balance sheet, incredible balance sheet as well. 49, almost 50 billion in assets and 20 billion in liabilities, net debt 23.16 billion. So again, COVID proof, pandemic proof clearly, unlike a lot of other stocks. And I think long term, those are going to be winners, and you're going to get some juicy dividends as the years go by. And if you reinvest them, absolutely, it's just going to compound. So that's my like trifecta. If I had to make a portfolio of three stocks, it would be O, Stag, and Nvidia. Just dividends and massive returns on Nvidia as it skyrockets to 1,000 and then splits again and then rinse and repeats that same pattern because it's done so many forward stock splits. Not the other kind of stock split, not the bad one, not the reverse. They don't do no. What's a reverse split? That they don't even know what that is. It's not even doesn't even exist with this stock. So always buy for long term. Always buy proven companies with proven charts. By the way, because there's some companies that their their company, their business is growing, but the chart is kind of eh. So, all right, that's it for the video. Hopefully, maybe I've encouraged you to look into Stag and O and buy some stock and hold it. Again, these are long terms. These are not for swing trading. You better have patience and a lot of it because these aren't swing trades. These are buy and don't even look at it for 20 years. All right, guys. I'll see you in the next one.